Good morning, everyone. I'm Jeff John Roberts, a crypto editor of Fortune magazine, and the world is changing. You know how? Because I'm at a crypto conference about to interview S&P and Bank of America, and I've been doing this stuff for a decade, and this, I tell you, at least 5 years ago, this would never have happened. I'm just going to toss it to the panelists quickly to give a quick overview. Just say Ed, what is Bank of America doing with crypto?
I'll have to do the unfortunate disclaimer of everything I say represents my own individual perspective and not all of Bank of America. But I head up crypto and digital asset investment banking at Bank of America. What I do is I'm a strategic advisor. I basically work throughout the ecosystem, advising companies, M&A, capital raises, and just long-term partnership.
Okay. Good morning, everyone. So my name is Chuck Mounts. I'm the new Chief DeFi Officer at S&P Global. It's a role that was created about 5 or 6 months ago, and the mandate is, in essence, to figure out and develop a strategy and business function to create a new generation of risk assessments that are fit for purpose in decentralized markets. So coming into this role, before here I was the Chief Index Officer at S&P Dow Jones Indices, and then before that my career in the fixed income and credit business, primarily on the sell side.
We were talking beforehand about sort of the traditional IPO market, which of course isn't doing great right now, but it's still massive amounts of capital could come into this sector. But it's funny because my time covering crypto, it's all about the tokens and flipping the tokens and stuff like that. But you guys are thinking that, I think it was you, Ed, who said there's 95 unicorns out there, if we want to look at in terms of traditional Silicon Valley startups, that you think could start proceeding towards becoming public companies. So do you think that's actually going to happen, and how will it happen?
I think it's always whatever the objective is of the founder and the companies, and I think that obviously there's been a significant migration of TradFi personnel to the crypto universe, and there's obviously been a lot of equity and options issued there. So a liquidity event is obviously an attractive thing for the unicorns, especially for the capital raise from the VC side. I think at the end of the day, there's a ton of institutional buy-side equity interest in the sector. We have a significant research arm that certainly talks with a lot of the companies and presents fireside chats around that and tries to bridge education. I think when you think about IPO and bringing in institutions into the sector, it's largely about education. It's educating the investors about how you play in the ecosystem, how you think about your long-term growth and positioning. But also, I think it's how these firms develop the management execution to represent, they can actually be a public company, right? Because the strains of being a public company, doing earnings calls, and being in that regulatory environment, it's much more added complexities than obviously being private, and most people would like to stay private. But by being in this shifting regulatory market, being a regulated public company adds such a significant moat and ring fence around your qualifications for I guess growth, that I think that it's one of those things a number of platforms are thinking about now and just preparing for and waiting for those windows.
Chuck, well, tell me about the big investors, the pension funds and so on, and they're used to having everything rated, standardized, regulated to put their money in. But you're saying right now the infrastructure is not there for that to happen. So what's missing for, what are the missing pieces for, the giant conservative investors to really come in? I've heard about, this is one of these tropes that's been going on for a decade. Institutional money's coming, and yeah, a little bit, but is it actually coming this time?
Right. So, I think when I look at the landscape right now, I think the seeds of crypto spring have been laid already or are in the process of getting laid. And I guess the first piece of that is around the regulatory and policy environment and getting some policy clarity to establish some markers of progression in the field that will allow the big institutional players and asset allocators to be more confident and comfortable in kind of dipping their toe and starting to allocate funds into this space. And certainly there's a lot of legislative, when I say policy approach, it's both legislative and regulatory, but I think there's a lot of action on the legislative side, and although I don't know that we're going to get a stablecoin legislation this year, I would expect to see something next year, or hope for something next year. And I think that will prove to be an important marker for kind of the pathway of institutional funds into the digital asset and crypto space. But then in addition to that, once there's some policy clarity, I think there's going to be the need and looking for some frameworks of risk assessment that they're used to that can both kind of integrate with internal risk assessment capabilities and also facilitate kind of their communication with their regulators. And I think a firm like S&P Global can help provide that given our long-standing history and expertise in risk assessments, and as a result of that, our connectivity to kind of policy and regulatory frameworks.
Yeah, I want to stick with you for one more sec here, Chuck. You mentioned stable coins, and prior to this talk, you said you guys, S&P is working with Make or Die, and that surprised me. What's going on there?
Well, no, so I wouldn't say we're working with Maker, but Maker's been doing a lot of interesting work with other stakeholders in the ecosystem around real-world assets and financing real-world assets through DeFi. And we think that's a particularly promising area for the institutionalization and the maturation of the DeFi and crypto ecosystem. So we are of the view that kind of tokenization of everything is going to happen. So there's really two pieces there. One is around tokenization of real-world assets, and then the other is actually financing real-world assets on DeFi rails. And that's where Maker's been a key player and doing some really interesting things in the ecosystem.
Huh. Yeah, and with well, I just have to ask though. I remember I was actually at a conference and somewhere in this venue about 5 years ago when security tokens were the big thing. There's companies like Harbor and stuff like that, and everything was going to be securitized, you know, from real estate to equities, and it just kind of fizzled out. Nothing happened. Ed, is that something you've been watching, or do you hear any chatter about let's securitize everything, put it on a blockchain? Or?
Well, I think it's important to note, right? Like with all the policy change and shifting policy and talk about central bank digital currencies and tokenization, that if you think about all the traditional financial institutions and what qualifies as a qualified custodian, this is a novel technology. And no large financial institution is actually a qualified custodian given the novel technology, right? This is completely new, and the fact that, you know, if it's a CBDC, it's that's on Ethereum blockchain, right? If I've not traded Ethereum or I don't hold ETH, you know, in custody, then how do I have that experience and understanding security in order to even, you know, to trade or secure a layer 2 application? So if you think about, you know, like one of the things about policy changes and all this incremental shift in holding and trading tokenized assets, I mean, this is why financial institutions are all interested in this asset class. It's whether you believe in crypto or not, it's trades 24/7, 365 days out of the year, globally with minimal friction, right? And at extremely low cost. And so, you know, I'm not saying anything that anybody doesn't know in this room, but there needs to be this incremental step for all these you know, financial institutions to basically, you know, I guess have a test net, trading and holding normal crypto. If it's taking a bet on the half trillion market of Bitcoin and ETH, you know, I'd rather make a mistake there than on the 16 trillion of tokenized assets that will be coming, right, over the next several years. And so it's the same with, you know, you have perpetuals and derivatives being traded outside the United States, and that's what I think something like an $80 billion volume market. You know, like people are learning. FTX has an application with the FCM now. You know, everybody needs to learn how to trade that. You know, or trading that, and it's hard for traditional financial institutions who have those FCM licenses to be able to just trade that if they've never done that before. So there's this massive learning curve that everybody needs to get up to speed in order for this adoption, this massive on-wave adoption to occur. So it just doesn't happen overnight. And I think that there's this friction point with policy that allows that on-ramp and saying that they want that, but yet not providing the regulatory framework to onboard that.
Yeah, I just want to add, if anyone has a question, there's a mic runner here, so just shoot your hand up and I'll go to you, because there's probably some people very versed in finance here who have good questions. But I just sort of touching on what you're talking about, Ed, as a crypto reporter, I admit I'm not a banking reporter, and I know a lot of the crypto crowd don't like the banks, not don't like, but distrust. There's a lot of mistrust because they perceive the banking industry is trying to screw them in DC and they're cutting them off from things like that. But I'm curious, and then you got Jamie Dimon still out there going on about rat poison and Ponzi's and blah, 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 because that's what Jamie Dimon does. But I'm curious, inside the banks, like, your colleagues, you guys are fairly up there in these big institutions. Do your colleagues have crypto accounts? Do they play with DeFi? Do they own Bitcoin? Like, what's going on in the C-suite up there?
So for our organization, I would say, obviously, 35,000 person organization, it's a mixed bag. But for the senior executive leadership, there's a lot of buy-in and understanding that we are at the precipice of a fundamental transformation in how markets function. And so that goes all the way up to our CEO and then across our executive committee. And so you have different levels of buy-in, or it's not really buy-in, it's more like levels of knowledge. But certainly, my colleague, Charles Jansen, who has been spending hours upon hours with individual kind of teach-ins and educational sessions with the various members of our ExCo. So there's an acknowledgement that that's needed, and steps are being taken to bring not only our executive committee, but our board members up to speed.
But I mean, do these board members, do yourself own any crypto? Are you allowed to by company policies?
Yeah, so yes, on both counts. I would say it's disparate across the senior leadership or executive leadership, like who is actually involved in owning crypto. But we are allowed to, and people do.
And do you yourself own any crypto?
Yeah.
Can you say what?
No, I'd prefer not to.
Fair enough, fair enough. No one likes that question. Ed, how about you? Like, are you hands-on with crypto? I mean, do you own a wallet? Does your boss play with crypto? Do your colleagues? No, I shouldn't say play with. I mean, it's a real new asset. It's like you have to know how to use a
I'll say
brokerage
this.
account.
I'm not going to talk about company policy or talk about who trades what or what I trade. By the way, if you've been around crypto a lot, you'd never talk about your wallet or just basic security reasons.
No, of course.
I would say this, like, it's once again, it's novel technology. Like, you have to understand how it works. You have to understand, for instance, like even at the protocol level, the difference in the friction points between using a MetaMask or a Phantom wallet, and like the obviously the Web 2. On-ramping and similarities of something on certain protocols versus the more challenging aspects of protocols that are more complex to use that even crypto natives take a lot of time to understand. And one of the things that when you look at the space and you look at the even at the empirical level of the layer ones, like it's still quite clunky. And there's about 300 million users globally of crypto. And the question is, how do you onboard to the next billion, right? And so in order to do that, of course, we look at it, we understand it, we work with the data providers. I obviously speak to the range of different firms to understand what's going on, including the layer ones. And so, it's not about, I would say that I wouldn't have my job if there wasn't support at the very senior levels, and we wouldn't have the research arm we do if there wasn't significant support. And I would say that there isn't a single bank on Wall Street that is not looking at this, because whether or not, like, once again, you believe in Bitcoin or ETH, you believe that the market infrastructure is changing, right?
Yeah, no, I appreciate your answer. To be clear, I wasn't trying to pry, guys. I just think it's interesting watching Wall Street and crypto start to meet each other, because they used to, be completely different states, different corners. And I've also noticed that crypto is a lot more New York-based than it used to be. And things are changing. Just the fact here, talking about phantom wallets and stuff, as the Senior Bank of America guy, shows where we've come. We've got a question in the very back. Please go ahead, sir, and introduce yourself.
Is this working? All right, great. Question is whether either your bank or other banks that you all have exposure to are open to actually trying to take crypto companies public. And I mean crypto, either a layer one or even crypto adjacent companies? Like, what is each of your bank's current or in your networks current risk tolerance for that? You know, what do you think the internal approval process would look like for actually kicking off that process? You know, what are the exchanges saying to you? You know, what are you hearing on that front?
Well, obviously there's Coinbase, it's a public company and direct listed. Wasn't a traditional IPO. And I would say that if you saw, obviously we came up with a significant run up last year and there's a lot of mature profiles and high valuations. There are a number of companies that look to RFP and understand the IPO process, right? Especially from pressure from existing investors. And I think that, I won't speak for just Bank of America, I think every bank is looking to help encourage the adoption of this sector, because there's two sides of the coin. Obviously, there's institutional buy-side investors that are massively interested in this sector, and they want access. They're not going to necessarily hold tokens, so they want to understand and hold the companies, right? And so the more companies that are able to go public creates obviously more education around the sector, what's going on, how they're active in that within the ecosystem. So I think every financial institution is trying to speak to different various companies, exchanges, infrastructure, data analysis, NFT platforms about that, right? So the answer is, I think it's widely accepted across Wall Street that there's engagement with these companies. There's been other announcements where some other boutique banks or other banks have named similar positions as myself, right? And so it's definitely becoming highly embraced by traditional bulge bracket and boutique banks.
Chuck, did you want to add anything there?
No, that's. I think he covered it well.
Go ahead, sir.
Can you hear me? Oh, yeah, great. Dave Weisberger, the CEO of CoinRoutes and a 35-year vet from Wall Street. We'll talk about a bunch of stuff. My question is much more specific, really, for you, Edward, and what you have to deal with on a day-to-day basis. I mean, I started my career in program trading, which was always considered cannibalistic to, high-touch trading. Crypto is unbelievably disruptive, potentially, to the bank's business. Just the simple notion of pairwise tokenized equities that could trade on one platform in dollars, yen, euro, or against stablecoins disrupts your ADR business completely. How do you manage internally with those potential issues coming up which is why the crypto industry, by the way, is so distrustful of the banks? How do you manage navigating those potentials versus not missing out on what will probably be that changing technology, and how do you kind of navigate those issues internally?
Sure. Once again, I'm not going to speak directly to our bank policy, but I'll just speak in general terms. Every bank is aware of, once again, I think the changing market infrastructure, right? And the one thing I'll address is that this skepticism that you kind of alluded to by crypto natives, I would kind of argue that point in the sense where the biggest issue that you see right now in crypto is the lack of cash in the system, right? So everybody wants to, they need more liquidity. So they want to figure out how to on-ramp, have more institutions, everybody, we started this conversation the institutions are coming, right? The big run-up in 17, right, was essentially a retail wave as people were looking for stored value because of geopolitical risk in China and other parts of the world, and they didn't have access to the dollar. So the Bitcoin became from novel to actually a store of value very quickly, and people are ramping and their wealth there. And everybody kept saying, oh, the institutions are coming and institutions are coming. The infrastructure wasn't there, right? Coinbase was helping use Silvergate, Signature East West Bank in order to help clear institutional trades, right? But it didn't manifest overnight. What you saw over the crypto winter was a lot of the infrastructure being built, right? And so, and a lot of recognition around that. And I'd say that you see all the financial institutions all have some sort of crypto arm. JP Morgan has Onyx. Goldman Sachs makes an announcement every other month, whether, accidental or purposeful. I think you're seeing a lot of platforms talking about this this sector and the need to be able to engage there because of the technology. I would say this: there needs, once again, we go back to the regulatory clarity. We are.
I'm sorry, Ed, I'm going to have to cut you off there. We're out of time. I do want to slip in one last question. S&P, Chuck, is known for rating. It's famous for that. Do you see a day where S&P will be rating stablecoins and blockchains?
That's what we're trying to figure out right now. I think that we've integrated kind of aspects of crypto and digital assets into our traditional rating structures. And part of my mandate is to figure out what is that next generation going to look like that would be fit for purpose. And it may not be a rating. It may be more akin to a risk assessment. That could be like a cyber risk assessment or even an ESG risk assessment that can help establish a framework and shine light on the idiosyncratic and systemic risks that exist in the ecosystem that we can learn and leverage from the TradFi world into this specific DeFi ecosystem.
Great. Well, Wall Street is clearly in the house in the crypto world. This is new, but it's cool. Please give it up for our panelists. Thank you, everyone.